Ladies and gentlemen, I want you to imagine this. The same lightning that struck in 2013, the same thunderstorm that raged in 2017, the same firestorm that illuminated 2021, today that storm returns, not as rumor or hype, but as the crystallization of ideas, capital, and conviction. In this moment, we stand on the cusp of another great awakening in the world of cryptocurrency, an exponential convulsion of growth that many will say, "I told you so," but few will truly act. We're not here to chase charts or catch momentum, Gretch. We are here to understand the forces shaping the future, because once again, everything old is becoming new again in the best possible way. Every great technological revolution follows a rhythm, a pulse that beats across time, each cycle more powerful than the last. The story of cryptocurrency is no different. What we are witnessing today is not randomness, not coincidence, but the inevitable repetition of momentum cycles driven by human behavior, technological progress, and the unrelenting force of truth finding its way into the world. In 2013, the world first caught a glimpse of what was possible. A handful of innovators and visionaries saw beyond the noise. They recognized that Bitcoin was not just another experiment in digital money, but a declaration of independence. Independence from a system that inflates, manipulates, and erodes value over time. The price rose from obscurity, and for the first time, people realized this wasn't just code, it was a new monetary network. Of course, the world wasn't ready. Infrastructure was immature, understanding was limited, and volatility was the price of discovery. But the idea had been born, and once an idea like that takes root, it cannot be buried again. Then came 2017, the second Great Awakening. This time, the wave was larger. The word blockchain was on the lips of every investor, developer, and policymaker. The curiosity became belief. The market flooded with capital, talent, and speculation. But underneath the mania was something deeper, the architecture of the new economy taking shape. Exchanges matured, wallets became accessible, and the narrative shifted from what is Bitcoin to how can we use this technology to change everything? The inevitable correction followed, as all revolutions experience. The weak hands fled, the critics rejoiced, but the builders stayed. They stayed because they understood that each crash is a cleansing. It removes the noise and leaves behind conviction. 2021 arrived, and the cycle repeated once more, only grander in scale and scope. This time, institutions joined the game. Wall Street wasn't laughing anymore, it was investing. Corporations began to hold digital assets on their balance sheets. The infrastructure built in the prior cycles enabled billions in transactions, custody, and adoption. Countries debated legal frameworks. Some even adopted Bitcoin as legal tender. And for the first time, the narrative of cryptocurrency moved from speculation to survival. In a world of inflation, devaluation, and financial uncertainty, people turned to something incorruptible. And now, here we are again. The same signs are appearing, the same momentum is building, but the magnitude is far greater. Each cycle builds on the foundation of the last. The knowledge, the technology, the accessibility, everything compounds. What began as a spark in 2013 has become an unstoppable current of energy flowing through the global economy. Every time the market pulls back, it doesn't die, it strengthens. The network becomes more secure, the developers more sophisticated, and the believers more unwavering. The rhythm of adoption is not accidental. It's encoded in human psychology. We resist what we don't understand, then we mock it, then we fear it, and finally we accept it as inevitable. Every technological shift from electricity to the internet followed that same emotional curve. Cryptocurrency is walking that same path, only faster because information now travels at the speed of light. Each time the world calls it a bubble, each time they declare it dead, it rises stronger because what's being adopted is not a fad, it's a fundamentally superior system for storing and transferring value. Momentum, too, follows its own logic. It's born from conviction. When the believers build, educate, and hold through the storms, they create the base layer of faith on which the next wave will ride. Momentum doesn't come from hype. It comes from proof that the technology works, proof that the community endures, proof that no government, no institution, no central authority can shut it down. That proof compounds with every transaction, every new participant, every block added to the chain. This is why the cycles repeat, not because people forget the past, but because innovation requires time to be absorbed by society. Each wave is not a rerun, it's an evolution. The 2013 wave was discovery. The 2017 wave was expansion. The 2021 wave was institutionalization. And the next one, the one unfolding right now, is integration. It's not just investors or traders anymore. It's nations, corporations, and ordinary people seeking refuge from the crumbling walls of the old financial world. The market will rise again, and when it does, many will call it luck. They'll say it's just speculation returning. But those who understand the rhythm, those who have lived through these cycles, will know it's not luck at all. It's destiny. The network is growing, adoption is compounding, and momentum is building once again. History doesn't repeat, but it rhymes, and this rhyme sounds a lot like 2013, 2017, and 2021, only louder, stronger, and more undeniable. The world is waking up once more. The next explosion of value isn't a surprise. It's the natural consequence of truth aligning with time. Those who see it now, who understand this repeating cadence of innovation and adoption, will not be spectators to history. They will be its authors. When a technology evolves from a dream into destiny, it passes through 3 stages: ridicule, resistance, and finally, reverence. Cryptocurrency has walked that path. What began as a radical idea whispered in online forums has transformed into one of the most resilient, sophisticated, and unstoppable infrastructures humanity has ever built. We are witnessing the maturation of an entire digital financial system, one that no government designed, no corporation owns, and no single person controls. It's not theory anymore, it's engineering at planetary scale. In the early days, people dismissed this technology because it looked primitive. Transactions were slow, interfaces were clunky, wallets were confusing, and exchanges were fragile. It was like the internet in 1994, awkward, underestimated, and misunderstood. But just as the web matured into the backbone of global communication, crypto infrastructure has evolved into the backbone of digital value. It's not the same fragile ecosystem it once was. It is hardened through failure, refined through iteration, and strengthened through every challenge that tried to break it. Today, the technology stands unshakable. The networks are more efficient, the code more secure, and the architecture more scalable. Layer 1 blockchains have evolved from isolated silos into interconnected systems. Layer 2 solutions have turned what was once a limitation, slow transaction speed, into a feature of limitless scalability. We now see lightning-fast payments, decentralized exchanges operating in milliseconds, and smart contracts executing complex logic without human oversight. This isn't an experiment anymore. It's an operational, global, open-source financial machine running 24/7 without permission, without pause, without error. In 2013, the idea of institutional custody for digital assets was unthinkable. Today, Global banks and Fortune 500 companies are building crypto divisions. Custody solutions now meet institutional-grade security standards backed by insurance, compliance, and cryptographic rigor. Cold storage, multi-signature wallets, and advanced hardware modules ensure that digital wealth can be held as safely as, if not safer than, any asset in history. The maturation isn't just in technology, it's in governance, regulation, and integration with the legacy system. Crypto no longer exists outside the financial world. It is quietly becoming its core. Think about what has been built in just a decade. Entire decentralized economies now function without a central authority. Billions of dollars move through networks secured not by walls or banks, but by mathematics and distributed consensus. Every transaction, every node, every miner contributes to a single unified truth. The blockchain cannot be corrupted. That's the foundation of trust that every modern institution has failed to provide. And the infrastructure continues to evolve. Interoperability, once a dream, is now a reality. Chains that used to operate in isolation can now communicate seamlessly. Bridges and oracles are connecting ecosystem, enabling liquidity to flow across networks like blood through a living organism. Decentralized finance platforms have replicated and improved every major function of the traditional financial system. Lending, borrowing, trading, yield generation, all done transparently, auditable in real time, governed by code instead of human bias. The user experience has matured as well. What was once the domain of coders and cryptographers is now accessible to anyone with a smartphone. Wallets are intuitive, exchanges are regulated, on-ramps are simple. The complexity that once repelled the average person is being replaced by seamless design. It's the same story we saw with every technological revolution. At first, it's only for the experts. Then suddenly it's for everyone. Beyond that, something more profound is happening. Crypto is not just maturing as a technology, it's integrating into the very fabric of modern civilization. Governments are exploring central bank digital currencies. Major payment processors are integrating blockchain rails. Entire industries, gaming, supply chain, healthcare, real estate, are being rebuilt on decentralized architectures. The financial system that once relied on trust in institutions now relies on the reliability of mathematics. That shift is irreversible. And like every revolution before it, the real inflection point comes not when people talk about the technology, but when they stop talking about it, because it's simply there, embedded in everything. No one asks how the internet works anymore. They just use it. The same will happen here. In the future, you won't buy crypto. You'll use it, you'll earn it, you'll transact with it without even thinking. That's what technological maturity looks like when the extraordinary becomes ordinary. The beauty of this moment is that it was earned. Every failure, every hack, every regulatory battle forced the ecosystem to evolve. Each problem became a test, and every test was passed. That's what gives this system its strength. It is anti-fragile. It grows stronger through stress. You can't stop it, because stopping it would require stopping the human desire for freedom, transparency, and ownership. The foundation is laid, the rails are built, the systems are hardened. What began as an experiment in digital scarcity is now the infrastructure for a global economy that never sleeps. The old world runs on debt, permission, and trust in intermediaries. The new world runs on code, verification, and self-sovereignty. One system is fading, the other is flourishing. And as this infrastructure matures, the question is no longer will it survive, it's who will survive without it. Because every business, every government, every individual will soon have to interact with this new digital foundation. It's not coming, it's here. It's humming beneath our feet, reshaping the world block by block. And those who understand that, those who see this maturation for what it truly is, are not spectators in this transformation. They are the pioneers standing at the edge of history, watching the digital world finally come of age. Every great movement begins with a story, a narrative powerful enough to shift perception, to challenge the status quo, to realign how people see value, power, and truth. Cryptocurrency's story has always been about more than price or speculation. It's about sovereignty in a world where control has been centralized, inflated, and abused. Today, that narrative is no longer just resonating with a few contrarians on the internet. It's aligning with the deepest economic and geopolitical realities of our age. The world is changing, and this time the winds are blowing in crypto's favor. For over a decade, the idea of digital money seemed like a rebellion against the system, but now that rebellion has matured into reason when people watch governments print trillions of dollars in months. When they see their savings devalue while asset prices soar out of reach, they begin to ask the question that ignites revolutions: what is money, really? That question, once taboo, is now global, and every time that question is asked, the narrative of cryptocurrency gains power. In the old world, money was a promise made by institutions, banks, governments, central authorities. It required trust. You had to believe that the people in charge would not abuse that power, but history tells us that they always do. Inflation is not an accident. It's a feature of the fiat system. It's a slow, silent tax that punishes savers and rewards debtors. It's the mechanism by which wealth is transferred from the many to the few. And in that realization lies the fuel that drives people towards something different, something incorruptible, decentralized, and finite. Now, macroeconomic forces are aligning to accelerate that migration. Inflation is persistent, debt levels are unsustainable, and the confidence in central banks is eroding. Currencies are weakening, nations are weaponizing finance, and people are realizing that digital assets offer something their banks cannot: true ownership. When you hold crypto, you hold sovereignty. No government can dilute it, freeze it, or seize it without your consent. That's not a small thing. That's the reawakening of financial freedom. Geopolitical tensions only strengthen the case. As nations compete for influence, they're discovering that the one who controls the financial rails controls the narrative of global trade. But the world no longer trusts a single dominant power to run those rails. The rise of decentralized networks offers an alternative, a neutral, open, global settlement layer not bound by borders or politics. When capital can move freely, without permission, across continents and time zones, the concept of money transforms. It becomes pure information, and information wants to be free. At the same time, the generational divide is widening. Younger generations, raised in a digital-first world, don't trust paper systems, legacy banks, or centralized gatekeepers. They live online, they build online, their wealth, identity, and influence are digital. To them, crypto isn't a novelty, it's the natural evolution of value in a connected age. The same way social media decentralized communication, crypto decentralizes money. That generational conviction is the silent force pushing this movement forward, regardless of market cycles. The narrative has matured. It's no longer get rich quick. It's preserve what you've earned. It's opt out of a system designed to drain you. The story is being rewritten not by speculators, but by savers, by nations, by corporations seeking a store of value immune to inflation. This is why adoption keeps spreading, because at its core, this is not a financial revolution, it's a psychological one. People are waking up to the truth that money backed by politics is fragile, but money backed by math is eternal. And as the macro landscape deteriorates, every argument for crypto becomes louder. When banks fail, people look for alternatives. When inflation rises, people look for scarcity. When governments tighten control, people look for freedom. Cryptocurrency is the convergence of all those desires. It's not fighting against the current, it is the current. Technology alone doesn't create revolutions. Alignment does. And right now, technology, economics, and ideology are aligning in a way that makes this movement unstoppable. The financial world is fracturing. Some nations are racing to digitize their currencies, others to accumulate hard assets, and individuals everywhere are seeking refuge in assets that cannot be printed or censored. This alignment of macro pressure and technological readiness is what defines turning points in history. We've seen this before. When the internet collided with globalization, the world changed forever. Now digital money is colliding with monetary dysfunction, and the outcome will be just as transformative. For the first time, humanity has a tool that separates money from state, trust from authority, and wealth from permission. That's not an investment thesis, that's a civilization shift. So when people say crypto is exploding again, they're missing the point. It's not exploding, it's converging. The narrative of freedom, the technology of decentralization, and the macro reality of financial instability are fusing into one unstoppable force. You can't legislate it away. You can't print it out of existence. You can't silence an idea whose time has come. The winds of history are turning. The narrative that once seemed fringe is now the logical response to a failing system. The macro tailwinds are not temporary, they're structural. Every dollar printed, every bank that falters, every policy that manipulates the markets only strengthens the case. The world is not just adopting a new currency, it's adopting a new consciousness about value, control, and truth. And in that alignment lies destiny. Because when the narrative of freedom meets the machinery of technology, and both are powered by the necessity of economic survival, the result is inevitable. The world will change, not because it wants to, but because it must. Markets are not driven by numbers alone. They are driven by human nature, by fear, greed, hope, and disbelief. Every cycle, every surge, every crash is not just a financial event, but a psychological one. If you strip away the charts, the graphs, and the algorithms, what remains is the same story told over and over again, emotion colliding with opportunity. That is the rhythm of the market, and it never changes. Each great crypto cycle begins quietly. It starts in darkness when interest is gone, headlines are negative, and the world has decided that the experiment has failed. Prices are low, confidence is lower, and yet, in that silence, something extraordinary happens. Builders build, believers accumulate, and innovation continues without applause. This is the accumulation phase, when conviction is tested and patience is rewarded. The crowd is absent because they are guided by emotion, not vision. But those who understand cycles, those who have felt the pulse before, know that silence is a signal. When the market looks dead, it is simply preparing for its next breath. Then slowly momentum returns. A small rally sparks curiosity. A headline stirs the memory of the last bull run. Volume begins to rise. And with it, attention. People who once mocked the space start to reconsider. Analysts begin to draw new lines on old charts. This is the early awareness phase, when the market transitions from disbelief to curiosity. It's subtle, fragile, and often ignored. The early movers see the shift before it's visible to everyone else. They don't chase, they accumulate with quiet conviction. As more people take notice, the energy builds. What begins as curiosity turns to excitement. Prices accelerate, social media erupts, and mainstream media suddenly rediscovers its fascination with digital assets. The momentum phase begins. It's here that psychology flips from caution to euphoria. Everyone wants to be part of the movement. Narratives multiply, new projects, new tokens, new promises of wealth. It feels like it can never end. That's the trap. Because the same force that drives expansion, collective belief, also sows the seeds of the next fall. When everyone is convinced it's different this time, it never is. At the peak, logic evaporates, valuations disconnect from reality, and people trade stories, not assets. The market becomes a mirror reflecting human emotion at its most extreme. Greed becomes a contagion. People who never cared about technology suddenly become experts overnight. Friends, families, entire institutions join the chase, convinced that waiting means missing out. This is the mania phase, when the market no longer moves because of fundamentals, but because of emotion feeding on itself. And yet, history always reminds us nothing exponential continues forever. Then comes the correction. The music stops, the air thins, and the same crowd that once shouted to the moon now whispers, "I told you so." Fear replaces greed, and denial turns to despair. This is where markets reset and truth returns. Many leave scarred and bitter, but the builders, the true believers, remain. They understand that each correction is not destruction, but purification. It's where illusions burn and value consolidates. What survives is stronger, leaner, and more resilient. Psychology is cyclical because human nature is cyclical. People chase comfort and flee discomfort. They buy hope and sell fear. That's why timing in markets is less about predicting numbers and more about understanding behavior. The greatest opportunities appear when emotion is at its extremes, when fear blinds the masses and faith fuels the few. The irony is that everyone wants to buy the bottom, but almost no one does, because the bottom never feels safe. It feels hopeless. That's what makes it the bottom. The seasoned investor doesn't chase trends. They study temperament. They understand that timing the market isn't about guessing dates. It's about reading the collective psychology of the crowd. They know that every parabolic move is followed by despair, and every despair gives birth to the next parabolic move. Markets are not random. They are reflections of emotion disciplined by time. Right now, we stand at the edge of another turn. The fear has been heavy, the disbelief deep, and the fatigue real. But in that exhaustion lies opportunity. The accumulation phase is always invisible to those who seek validation from the crowd. It rewards those who can see the invisible, those who understand that the best time to act is when no one else dares to. Every market cycle has one law. Patience is the rarest asset. Most will lose it chasing quick wins. Few will master it and reap generational rewards. The wise know that timing is not about predicting the next candle. It's about aligning your conviction with the inevitable return of human optimism. When that optimism reignites, when the next spark catches, the cycle begins anew. So the pattern repeats. Despair gives birth to belief. Belief gives rise to euphoria. Euphoria collapses into doubt, and doubt resets the system. The wheel turns endlessly. The only question is whether you will be one of the many reacting to emotion or one of the few acting on understanding, because the market doesn't reward timing. It rewards temperament. The one who can master emotion, who can hold conviction when others let go, becomes not just a participant in the cycle, but a beneficiary of it. And that, in the end, is how true wealth is built, not in moments of mania, but in seasons of silence.